Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian bulls have put in a very hard effort to stage a recovery since rebounding off 67.70 support. After posting a low of 67.69, the market has staged a somewhat in terms of recovery, but still has a lot of work to do above at 68.40 minor resistance and above a supply zone seen at 68.85.95. The market plummeted last week after the Australian Bureau of Statistics said that the Australian economy lost 19,000 jobs in October for the workforce against a view of forecast 16,200. From those numbers, full-time jobs decreased by 10,300 and part-time by 8,700. From a technical aspect, it's still married to a negative outlook with the RSI and the MACD, and therefore I do expect to see at least another round of tests towards the downside, and any advances above 40 should fail. A break of 67.70 re-exposes the downside objective of 66.60.80. The euro, well, we had a doji, a bullish outside range day, and now the break of 110.45. From the break, I do expect to see further gains as this outside range day or engulfing candle has been confirmed. But the RSI also breaking up could see a rise up towards 110.75 or 111.15.25 as a cap. I feel the market will fail towards this region and eventually turn around and look back towards this downside target of 109.50.70. Well, the dollar yen has staged a mild rebound and at present poses some threat for a challenge of 109.05, but technically still lagging momentum, or lacking more to the fact, and therefore I do expect to see the market eventually trade down towards the level of 107.85 to 107.15.35. Advances above 109, as I said, expect to fail. Little to say to the pound as it trades somewhat slightly bullish, but still in its sideways noise, and little to add to that. The gold aspect slightly wobbled on Friday as the market retreats from the level of the range close to 1,472 to 78. From the retreat, although we did get a bullish candle, the indicators have lacked momentum to support it, and therefore could see the market a little bit mixed into the start of this week. As long as we maintain above the level of 54 to 56, then I feel the market should continue on its trek towards 78 to 88.94 as a target. The technicals are a little bit somewhat confusing, not supporting these candles. So do be on your guard if you're trading from a long side in case we get a return back to the lower side of the range around 1,445. Oil rallied nearly 2% on Friday and finally breaks through this level of 57.55, but unfortunately didn't continue on in terms of triggering stop losses. Nevertheless, the break has given me an objective of 58.60 and up towards 59.70. Support seen at this stage at 56.80, and below that is where this trend support comes in, which is around 55 figure 40, and then beneath that $54 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the Intraday report and hope you enjoy the great start to this new week.